Welcome to this explainer. We're diving into a genuinely fascinating reality today. In the modern AI empire, 24/7 carbon-free electricity is the absolute most valuable commodity on Earth. And Constellation Energy, well, they are the mint. Think about it. The Federal Reserve can print trillions of dollars with just a few keystrokes, but you absolutely cannot instantly print uninterrupted, clean baseload power. Following the basic economic law where the most scarce essential asset becomes the true currency, electricity is essentially usurping the throne of traditional money. It takes years, massive capital, and intense infrastructure to create it, making it the ultimate bottleneck for all this technological progress we're seeing. So, here is our roadmap for today. 1. The real currency king. 2. Operations and stock correction. 3. The nuclear competitive edge. And 4. Evaluating the core risks. Section 1. The real currency king. If you look at the past, true global wealth was dictated by whoever controlled the gold mines, right? And later, it was the oil fields. But in our modern era, the real rulers of the future AI empire are the ones who control electricity. If NVIDIA is making the weapons and the big tech giants are claiming the territory, Constellation Energy is literally minting the real currency, keeping the whole empire running. They are the ultimate authority capable of printing the largest exclusive share of that currency. Moving right along. Section 2, Operations and Stock Correction. Okay, as the #1 producer of carbon-free power in the US, a staggering 70% of their generation comes from a totally unmatched fleet of commercial nuclear plants. This is not your average utility company just slowly chugging along. I mean, they are producing massive-scale electricity and selling it directly to Fortune 100 corporations that are practically begging for clean energy to hit their net zero targets. The rest of their mix is natural gas and renewables, sure, but nuclear is the undisputed core engine here. Now, despite some recent peak valuations, if you apply 2028 earnings estimates to current price levels, you actually reveal a highly attractive 14.4 forward PE ratio. Not too long ago, Constellation was carrying a huge premium as the absolute bellwether of AI power, bouncing between 30 and 40 times earnings. But as the stock pulled back recently, that valuation compressed to something much more reasonable when you look just a few years down the road. So, why the pullback? Well, the stock retreated to its 120-day moving average, not because the actual business stumbled, but really just due to standard market mechanics. You had major shareholders selling off an 11 million share block, institutions locking in some first-half profits, and honestly, the broader tech sector just taking a breather. It's a classic case of a stock rising way too fast and needing to catch its breath. Nothing to do with the company's performance. The crucial point is that behind the scenes, Constellation's fundamentals are actually accelerating. While traders were obsessing over short-term price action, Constellation officially submitted license extensions to keep their major New York nuclear plants running all the way out to the year 2049. They are steadily preparing to generate immense profits over 20 years into the future. They aren't thinking in financial quarters, they're thinking in decades. Section 3, the nuclear competitive edge. So, big tech's ultra-strict eco-friendly mandates completely disqualify solar and wind paired with batteries. Why? Well, because AI data centers require immense, concentrated power, and current battery storage simply cannot bridge the gap over multiple cloudy, windless days. Solar and wind sound amazing in theory, but data centers are massive energy hogs that never sleep. Batteries are great for a few hours of emergency cushion, but they definitely cannot run massive data centers through a 3-day storm. And if we compare nuclear directly to natural gas, we see that while gas is a decent temporary fix, it ultimately violates corporate net zero promises. Competitors have great gas assets that are super profitable right now, but they still emit carbon. For tech giants promising shareholders 100% clean energy, gas is just a transitional compromise. Constellation's nuclear fleet, on the other hand, is a flawless, long-term eco-asset, and its value only shines brighter as environmental pressures rise. Think about the big tech energy mandate as 3 non-negotiable steps. Step 1, emit zero carbon. Step 2, operate 24/7, 365 days a year, regardless of the weather. Step 3, provide massive gigawatt-scale power. Nuclear is literally the only escape hatch on Earth that perfectly executes all 3 of these steps simultaneously. Tech giants aren't paying a massive premium because they want to, they are paying it because they absolutely have to. And this unbreakable moat is exactly what allowed Constellation to secure a blockbuster 20-year exclusive deal with Microsoft, Get this. They are taking a shuttered reactor at 3 Mile Island, renaming it the Crane Clean Energy Center, and turning it back on specifically for one single client. This is a huge paradigm shift. Microsoft is effectively buying the entire output, which means high-margin revenue pouring straight into Constellation's bottom line by 2028. With the Federal Energy Regulatory Commission fast-tracking grid rights, this quantum leap in structural earnings is highly visible. We're looking at structural growth year over year, reaching an estimated $17.30 by 2028. You can literally see the structural growth baked right into the consensus. As these exclusive contracts go live, Constellation isn't just maintaining revenue, they are projecting a massive step up in profitability. Because Constellation operates in a total seller's market where building a new nuclear plant is virtually impossible in the short term, we recently saw capacity auction prices clear at an all-time high of $329.17 per megawatt day. Building new nuclear takes decades and astronomical capital, creating this insurmountable barrier to entry. That extreme scarcity gives Constellation the ultimate leverage. Section 4. Evaluating the core risks. To be completely objective here, we have to look at the immediate political tail risk. There is a totally neutral reality right now where local politicians and everyday citizens are actively questioning whether handing cheap nuclear power exclusively to tech giants is going to leave regular consumers with expensive, dirty grid power. It's a completely understandable concern. If a plant used to power a whole county and now all of it goes to Microsoft, regular folks might be left holding the bag. This dynamic could absolutely lead to serious regulatory pushback. Beyond the regulatory pushback, the company faces the extreme tail risk of nuclear accidents, a pretty poignant fear given the 3 Mile Island location for the Microsoft deal. Plus, there's the hazard of locking in fixed prices. If severe power shortages cause electricity spot prices on the open market to suddenly skyrocket tenfold, Constellation will be stuck on the sidelines, legally bound to their fixed 20-year rate, while their competitors make a total fortune. However, if you look under the hood at the contract mechanics, Constellation engineered some pretty brilliant financial safeguards. They secured initial rates of $100 to $102 per megawatt hour, which is nearly double the wholesale average right out of the gate. So they front-loaded their margins. And because they built in inflation-linked escalators, the contract automatically adjusts upward with labor and material costs. So they aren't totally frozen out if the economy shifts. Now I know, big tech is pouring billions into futuristic alternatives like nuclear fusion, deep geothermal, and small modular reactors. But let's be real for a second. These are decades away. They offer absolutely zero help for the massive power shortages we're facing right now. The tech world loves to talk about artificial suns, but if you need gigawatt-scale clean power by 2027 to win the AI race, you need traditional, massive nuclear baseload today. So, as we wrap up this explainer, I want to leave you with this thought. As long as the AI empire keeps expanding and these sci-fi alternative energies remain decades out, who else is truly positioned to mint the currency of the future? Is Constellation's absolute dominance a permanent fixture of our future, or are they just capitalizing on a highly lucrative, temporary gap in human engineering? That is the multi-billion-dollar question that will define the market for the next decade. Thanks for exploring the real engine behind the AI revolution with me.